please welcome Bank of America Private Client Advisors Barbara Liguori and Stephen DeLeo for the Legacy and Liquidity Workshop.
Hello, everybody. I'm Barbara Liguori. I am a private client advisor at Bank of America and have spent many years working with these wonderful people that you just saw up here today, helping businesses grow. And now I'm on the side of the bank where I'm, oh, hi, Patty. I'm an advisor helping them exit the business. So our section is on legacy and liquidity. Again, we're going to walk you through a couple of pillars that we work with our clients on helping them exit, and what do they do? How do they protect their assets? So some of the things that we'll talk about, exit strategies, tax strategy and deal structuring, operational independence, the liquidity event planning, and making sure that they don't leave any money on the table. That's the biggest thing. Obviously, we don't want to pay a lot of taxes, right? So how do we figure that out? We work with our wealth strategists. And we don't want to be unprepared. You always want to be prepared for that exit. You never know when it's going to happen. So the first thing I'm going to talk about is the different strategies that we use and that we talk to our clients about, which could be an ESOP. It could be private equity where they bring in a partner and we're discussing that with them, and maybe a strategic sale. You know, they could be selling and they want to get out. We also work with a lot of M&A firms. So, you know, when we advise our clients, we're telling them to actually look at, 3 different firms, find out who really knows your industry and make sure that you have the right one that you're going to actually be working with, if you're going to make that sale. And the family transfer, right? One of the stories that I have that I'm working with a client right now, he is selling his business, or he's looking to sell, and he's been looking for a long time. But he has a son that wants to come in the business. He has 2 other kids trying to figure out how to make it fair for everybody because they're not coming in the business. When do you start to transfer those assets over to the son? He also has people in his company that he really needs to hang on to and make sure that those people stay with his son if he decides to go that route. So lots of questions. A lot of things that we've discussed, and it could be a multiple of different things that we use with our clients to help them get to that end result, which is obviously getting the liquidity, having their legacy grow. And I could tell you that a lot of these clients that we deal with, it's always a different story. And we always bring in our team, obviously at Bank of America, to talk to them. So.
Yep, we believe that up here. Good afternoon, everyone. So as Barbara was saying, there's a lot of tools to help our clients. And what's going on right now in this country is a silver tsunami. And I don't know if anybody's ever heard of that. The silver tsunami is basically, there's something going on in the country right now called the silver tsunami, and that's the baby boomers are all like aging out. They're 60, 65 years old. Their kids went off to college to do something different and chose different careers, and they don't have anybody to leave their businesses to. So exit planning is super important for us. We need to monetize their life's work, and we need to pass that business on to someone else that's going to continue their legacy. So there's a lot of ways that we do this. I'll tell you a recent story. One of my clients came to me and said, Steve, I'm going to be 60 next year, and I want to sell probably in the next 2 years. And my answer was, that you should have started that a year or 2 ago. He wasn't prepared to sell. So we helped coach the client. We realized that he still had the accountant he started with when he was in his garage, which wasn't the accountant he needed to sell his business or be prepared to sell his business. So we helped to introduce him to other accountants, not replacing the one that they had, but to help them to really organize all of his documentation and paperwork, and to make sure that the numbers were accurate and couldn't be questioned by a potential buyer. We helped them there. We helped hire trust and estate attorneys, and the bank guided him along that process. It's not how much you sell your business for, it's how much you keep. Taxes are the #1 expense that we all have. It comes out of our paycheck. Everything we buy is taxed. And then when you sell a business, you have capital gains taxes, and after you die, you have estate taxes. If you plan ahead and you start early, you can do some really important strategies that will help keep more of that money in your pocket. Capital gains taxes on a federal level and a state level could be upwards of 37% or more. And estate taxes could probably be over 50% after you're done with your deductions. Those two numbers could quarter your net worth. So by planning ahead, you can do some really important strategies to help keep more of that money in your pocket, but more importantly, to leave a legacy for your family for generations to come. So planning early and having the right team is probably the two most important parts of exiting your business. Barbara?
So operational independence, making sure that your company can actually operate on its own, right? You want to make sure that you have workflows, leadership in the company, right? So that when you walk out the door, your company is able to operate. I mean, I can't tell you how many times that we deal with companies that the business owner is trying to do everything. And so you got to get yourself to that point where you're able to kind of start to delegate those responsibilities so that you can grow the business. Steve mentioned about the financials. That's huge, making sure that you have clean, transparent financials, and obviously your operations to be diversified. I mean, that's, for the success of the founder of the company, right? I just helped a client who wasn't going to be selling his company. He ended up going to a golf event. I won't say which one, but here on Long Island. He went to the golf event and he was with one of his vendors thinking he was going for just go out for the day. His vendor gave him he gave him an offer to purchase his company at 7.5 times EBITDA. And he didn't even know what to say because it wasn't even on his agenda to sell. But when he went back and realized, oh my God, like everything is in order. His shop was in order. He has a controller, the business is running. He didn't plan on doing it, but sometimes those opportunities knock on your door and you want to be ready. You don't want to be scrambling to get your business in order to sell. I just had lunch with him 2 weeks ago. He wants to sell. He wanted to close by the end of March, which he told him that it can't be done. I mean, that's how quick it's happening. And the reason is, the strategic buyer that's purchasing him is going to cut his expenses by, so he was able to give him that extra money that he just was like, I never expected this. So just always be ready because these owners, you just never know when the occasion's going to happen.
So a lot of clients receive emails and they say, oh, we want to buy your company. And maybe that firm comes in and buys their company, but you don't really know what that company's worth unless you have an advisory team, right? There's a lot of firms out there that'll help you to evaluate your company, give it a real true valuation. But there's also a process that you can go through where you create a competitive situation for that company, right? You go out to market, you go to multiple buyers, drives up the price. And so the multiples that you're getting on those companies are much, much higher than if you just answered an email and sold it to the first person that came, across your desk. It's very important to have the right team in place. I can't emphasize that enough. From a tax perspective, from an estate planning perspective, legal, I mean, there's plenty of liability that comes along with these processes. And so you want to make sure you're getting the best advice possible. Anything else, Barbara?
No, I think if anybody has any questions.
Any questions, anyone? We have 5 minutes left.
The liquidity and obviously the planning. Just having the right team in place when you are going to get to that point, right? To manage the assets. Have a team in place, when we meet with our clients, it's not just us. We have a wealth strategist on our team. We have a portfolio manager on the team. There's a lot of people there giving you advice as to what to do and speak to a lot of people, right?
So let's say you get lucky, you sell your company, now what? If you sell it to a strategic, maybe you don't show up for work Monday morning, but you do have all this money, right? So now you need to start a new life. You've been working night and day, every day, 7 days a week as a business owner sometimes. But now you may run a family office, right? You have to manage that money. You have to make sure you invest it wisely. You have to make sure that you can pass it on to the next generation. So again, it all comes back to trusted advisors to help you to continue to keep that money safe and to pass on the legacies to the next generation. Anything else, Bob?
Patty. So we happen to work in the private bank, so our clients come to us with 3 million or more. But of course, there are other banks and other advisors that you can go to. We have a whole Merrill team that works with us as well. So if it's under that, we can service them at the bank. It doesn't matter. So we have resources.
Hi, I'm Kelly, and thank you so much for your Legacy and Liquidity workshop talk. I'm only 23 years old, and it's such a privilege to be here in such a great room, such accomplished men and women. I've been learning so much. And a question I have for you is that how do you know your business is in great hand? Like, is there a clause to prevent it from selling in a certain like years? Like, how do you know if you were to sell it off and they were just to sell it off to another person? Like, that would just disrupt the legacy that you're trying to build. Like, is there a prevention clause on that? Thank you so much.
So that's a really, really great question, how to know it's in good hands. I mean, it depends on the size of the business, but if they're looking to sell, they're gonna deal with mergers and acquisition team that's gonna help them know that they're on the right path. They might just have a board that they're working with that's helping them guide. Some companies aren't large enough to have their own board, so they become parts of organizations that are here on Long Island and they create their own board. So I think you really just have to make sure you have a lot of, as Steve said, trusted advisors around you to make sure that you have the right advice. Because you might not always hear when something's wrong, and maybe somebody who's from the outside will tell you that, but maybe somebody on the inside is not telling you that.
There's a lot of ways to sell a company, right? Steve Madden went public, as we all saw in the movie. And there's not a lot of companies that are doing that. It's very expensive, very time consuming. What we're seeing a lot of activity on Long Island specifically is private equity or a strategic. So private equity would come in and typically buy a percentage of your company. The money guys don't know how to run your business. So what happens is they'll say, please stay on for a few years and teach us your operations and help us to grow this business. They may provide professionals or capital to get to the next level. And then there's a strategic where you're just really selling to a large competitor or a large competitor, a national company or an already publicly traded company. And on those, instead of staying on and going to work for the next few years to help them run it, you may completely exit, right? They may either fold that business into their own business and essentially buy your clientele, or what they'll do is they'll look to grow that business by using you as a platform and bolting other customers and other companies onto it. But there's a lot of different ways to sell companies. And to answer your question again earlier, how do you know who the right buyer is or partner to sell your company to? You're going to interview them just like they interviewed you. It's your life's work. It's the most important part of your assets. You spent probably the most time growing this than anything else in your portfolio. It's probably more meaningful than anything else in your portfolio. Your employees are so important to you, and you want to see them move on to the next level. So you have to interview those potential buyers and feel comfortable before you enter into any potential sale. I hope that helps.
I think we're out of time.
Yep.
A really interesting point that you added is that when a business purchases another business and then they add their own spin, but like, how has that worked out? Do you feel like the original business has lost its original identity, or it has like a fresh new spin, or how has that worked or hasn't worked out when a completely new entity took over and then it completely disrupt the whole original entity that everyone that's like familiar with. So how do you overcome that?
So I've seen a lot of different examples, and some companies, you know, they sell and they couldn't get to the next level, maybe because they weren't doing something efficiently, or they weren't doing it to what the potential clients really needed, or they couldn't grow it because they couldn't add additional products and services. You know, being a business owner, you're essentially jumping off a cliff and trying to build the parachute before you hit the ground. It's one of my favorite things I've learned in, you know, dealing with business owners. You're taking lots of risks. You have to be the HR department, the lawyer. You have to be, you know, purchasing. You have to be marketing and sales. And there's so many different aspects of being a business owner. And sometimes that gets overwhelming, and you may lose focus on the important things. Not the important things of doing good business, but the important things of innovating and growing and starting with new products and services. And what happens is a new company may come in with fresh eyes and revamp that company to make it stronger and better. And they may have more capital to do that, to reach broader markets. So again, maybe it keeps its same identity and just gets bigger, but sometimes it just needed a little bit more to get better. Okay. Our time is up. Thank you, guys.